edition of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Fred in Denver. Hey, Fred, what's going on?
Hey, Tom, listen, it's an honor to speak to you. I wanted to tell you, I'm one of your successful tigers, and the reason that I'm successful, I probably read a couple hundred books on technical analysis over the last 10 or 15 years. I'm a retired public school teacher, and I heard you talking today on your earlier show that if you really knew what you were doing in this business, you probably wouldn't have to work again. And I wake up every morning, I look at your book, I can tell you, every other author is just pales in comparison to your clarity. I just wanted to thank you.
Oh, I really appreciate it.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day, great weekend, great Thanksgiving weekend, folks. And, of course, let's make it a great week. Let's take a look at one of our 4 agreements. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We had the Dow up 32, NASDAQ down 11, S&P's up 2, gold contract up $4, trading at $1,714 an ounce. Silver off 22 cents at $31.93 an ounce. Platinum down $6.75 at $1,536 an ounce. Copper up 3.5 pennies at $3.39 a pound. Light sweet crude up $1.55, trading out at $99.76. Bonds down 28.6 at 143.04. Dollar index off 31.6 at 79.12. The euro up 11.6 at 133, and the yen trading at 77.86. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You go back to the 27th of October, we were at 1292. You go straight down into 1158. Yesterday, you go top side, price spread, no volume. Today, gives it up on the vine, big time. We did 913 million. It's just not even close, folks. You know, there should have been some follow through here. Yesterday was a dead cat. Today's even worse. Bottom line, what I expect will probably hang up here, but we're building the B to a C of a monster ABC down. The A on this baby is 1292 in the S&Ps, and the B is 1158. So you're talking some big money here. 1292 to 1158, 1158, 1258. You're talking a buck 58, 68, 78. Yeah, you're talking $1.40. If this end up, and I suspect that we're gonna, it hit the cash S&P today hit the 1203. The future hit the 1206. If you take the $1.40 off the 1206, it's bringing you right down to those October lows, and actually bringing you lower than that. Dow Industrials. We get over to the Dow. We take a look at the Dow. What we have with the Dow, same setup in the Dow. Dow's up 32 points today, 11,555. We did 913 million. This little baby wants to make its way back down to those other lows. This is just a dead cat. That's all we have. NASDAQ Composite. What do you have with the Composite? She gets over the high of yesterday, gets into the gap, can't handle it, does 1.6 billion shares. You know, the NASDAQ loves leading up, loves leading the way down, and she's going to be leading us down into this 2298 area. Dollar index. You take a look at this dollar, folks, it's just amazing. They can't back it off, and it's King Dollar, folks, is on the move, and it's on the move in a big way. What you have is this. Here at 79.12 right now. She backed down today with 20,000 contracts. She was going into 30,000 contracts, and she's hanging right below the highs, the last high we had out there, October 4th, which is the 80.43. This little setup here that is going on wants to bring it into 82.50. The largest setup wants to get it into the 89 area. Bonds, let's go over and we take a look at the bond market. What we have inside the bond market is this. Bonds won't back down either. 30-year bond today did 446,000 contracts. That was backing into 630,000 contracts. She wants to blow away the 147. She blows away the 147 and she has volume behind the move, folks. You're talking about $1.60. And if we go into the 10-year, you're talking about a 1.5 10-year bond. Over in Europe, still big problems. You got Germany still running at 7.18. Spain is at 6.3. France is at 3.4. Bottom line is that this is the S&Ps are building cars to go downtown. Bonds are building cars to go uptown. Dollars building cars to go uptown. Our phone number is 877-927-6648. Let's go to Dave in Clearwater. Hey, Dave, what's going on?
Hey, Tom, welcome back.
Thanks so much, man. Good to be back.
Good time out in California?
Well, yeah, it's always a good time. What happens is this. I was out at the Hard Asset Show. Great show. What happens at all these shows, though, Dave, is that we fly out and you're working 15 hours a day and that's it. And then you get back on the plane. I got back on the plane. I haven't slept since. What day is today? Today's Tuesday, right? So,
yeah, until midnight tonight.
Yeah, Tuesday. So I think I went to sleep Sunday night. Woke up Monday. I think I left Monday. Sunday night. I left Monday night at midnight.
Oh, no kidding.
Yeah, but that's cool. No, but it's a great show. And I want to thank all the Tigers and Tigresses for coming out there. I can tell you, folks, this show here. So it's the Hard Asset Show. This had the most boots that have ever been. There was 234 boots.
Oh, no kidding.
Now if you're a commodity bull, folks, that's the biggest danger in the world. The reason being is that prior to this, the most amount of boots was May of 2008. And what you had is that, of course, when I go to these shows, we've been doing it quite a long time now, but the bottom line is that the people that were there in May of 2008 aren't there anymore. They weren't there, and I suspect the same thing is going to happen this time. So when you see that many, it's a huge heads up because that's just the way that's the way a cycle goes, man. So it's pretty wild.
So basically, to put it in stock terminology, the weaker hands have been eliminated from the market, and the strong survive.
Well, what happened is this. So check this out, folks. So see, you had the escalation in the gold and metals markets, all the way up to 2008 in a big way, right? So what tends to happen in that market in particular, which is terrible, is you get a million small companies raising money. They end up going out of business. That was 2008. Most of them went out of business, right? Then they had the next run, 2008 to right now. Same type of setup, I suspect. It's a heads up in the aspect that when there are that many companies, so check this out, folks. When in 2002, the first gold show I did, there were about 30 companies. We were in New York. And there was maybe there were 35 companies. So there were 3 rows. So now there's 10 times that amount at these shows.
No kidding.
Yeah. Well, that's what makes markets. But that's what makes, it's just like anything else. You know what I mean? When everyone's in, forget it. Who are you going to sell to? So.
Exactly. I'll tell you, Tom, when the market opened up Sunday and the NQs just gapped up $30 on the opening because I had an open short position going in from Friday night.
Right.
When it gapped up on Sunday, I'm like, oh, man, there goes a big chunk of profit out the window. And I'll tell you, Tom, I quite honestly forgot some of the lessons I learned along the way. Lesson number 1 in life, when it gaps up, that's bullish. That is bullish by definition. That is bullish. And I kept saying to myself, man, this thing is going to come back. It's going to come back. And had poor money management and ended up giving a big chunk of cash back to someone else on the other side of that trade who was a sharper trader than I am. But nonetheless, the beautiful thing about it is money management. You have capital to fight another day. My question is this. I'm enjoying rolling with the NQs. It seems to me that the A point for the down leg was November 16th.
Okay, here, 1 second. Okay, go ahead.
Down leg, A point was November 16th, and we made a B point on the 25th, which would have been Friday.
Yes.
And then we gapped up on Monday, and we kind of went into the gap a little bit and pulled back today. It looks like it couldn't handle it. My question for you is this, Tom. Are you, on the one hand, there's two schools of thought that I'm thinking about. On the one hand, we've had this big consolidation at the top of distribution. Generally speaking, when an equity breaks out of a consolidation, or in this case the NDX, sometimes, usually more times than not, it tends to reverse back and test the bottom of that consolidation. And if that were to do that, it looks like testing the bottom of that consolidation would be a 618 retracement off of the downtrend.
And that number, folks, would be about 2286 he's talking about. And we're at 2212, right.
So there's that one school, so I'll wait for a test in that. But then there's also the other school that looks like it, with the dollar, trying to make its claw its way back up,
right,
that it may not have the strength to do it. So my question is, as you know, I'm a Market Insights customer. In your update report, you wanted to wait for higher prices to sell. What are you personally looking for?
Okay, so this is a great question, folks, because what you have is this, is that this very well could have been the C point of an ABC. But what happens to put a trade on here is really dangerous because, we've been down for, 3 weeks straight. You know what I mean? So it makes sense that they try to jam it higher again, okay? I'm going to switch you from the NQs. We'll come back to the NQs, and we'll go over the S&P. See, so what the S&P did today, it did exactly what it should have done. It came to the lows of those bars, and that's where I got that 1206 on the futures. That's where I was thinking it was going to go, and sure enough, it hit it, right?
Testing the bottom of the consolidation.
Yeah, exactly. Okay, and it gave it up, So, and what you do there, folks, is that when that happens, many times that's it. To me, what I'm doing, I'm gonna wait for that to get higher. If it doesn't get higher, then I got to deal with it. And stay short the euro. That's a better trade right now, Dave. That's why I'm staying right where, long the dollar, short the euro. Because you can see what happens. What's happening here, folks, is that the correlation, with with the market up yesterday, right? Bottom line is that, the euro still couldn't move, which is just amazing. So until the market talks a little bit more, I'd love to see it tested again, meaning test a high again to basically get the short position off.
Okay.
If you're going to do it here, what you absolutely have to do is you give it nothing. You follow me?
Right.
You give it nothing, period.
Give it. So, yeah, because that's why I want to call and chat you up for your insight, because, it's kind of, I don't think how to express my thoughts here.
No, listen, you're talking to the right person. Let me tell you what I did, okay? I sold the NQs. When I closed last Friday, I closed them, right? I opened them up Sunday night, okay? Because remember the market had gapped up Sunday night?
Right.
But then Monday morning it gapped more. I took the stop, but then what I did, I took that stop, and I took that bread, and I shorted the euro more. And that was you stay right there. We'll come right back.
X-Story.